Hey, I'm actually shooting this at 10. I said I was going to get it to you by 10. So, got to work on keeping my word on that one. I did have an issue with connecting in my router and everything, but that's still, if I said I was going to get it to you at 10, I should have had it at 10. So, I'll do better on the next one. As you can see, it's 10:03 now. But I'm supposed to get it to you at 10, even though I had some internet issues. But anyway, so let's go ahead and talk about the structure here. This is how somebody should be explaining this to people who just got started. They didn't explain it to me this way, but I wish they did. So let's take a look at this. Right here, the structure of this market is bullish. Okay, let me explain why. When this high was taken here, just imaginary straight line. You got to look at the lowest down close candle. Now we're just looking at one time frame, so you have to have multiple time frames. But I'm just giving you a generic view of this. Let me see if I can edit this picture. Hold on. Yeah, I'm gonna go ahead and edit this picture. So let's zoom back in on the structure. So what I'm saying is the structure is still bullish unless it can prove. Why is that line so thick? Okay, so once price took that line right there, let me get a different color. Once price took this line here, the structure is still bullish unless price can prove it can close below the close of that bearish close candle I just pointed to. The close of it, not the wick. Okay, because, I'm talking about this candle right here, the black candle. Okay, the black candle is a bearish close candle. This how ICT look at his candles. He do green and black. So the market is still bullish, unless it can prove it can close below that wick right there. Okay, I have a note, and this S pen should be showing up a little bit better than this. Okay, but we're gonna be all right. Okay, so that's what I mean by this here. All right, so let's continue to follow the structure. Okay, so then we see price breaking highs. Okay, so now it's made another high. What I mean is the swing high. Now remember, the swing high is, you got swing high and swing lows. So you got this candle here. Okay, and then you have, so this is considered a swing high. Remember, it's a pitchfork. Okay. And so it's always going to be a peak, like a top of a triangle. Okay. You're always going to have a higher high right here. And then you're going to have a higher low. I'm sorry. This is considered, I think this is a lower high. This is a higher high. And then higher low. I think it's a higher low. And then higher low. Okay. So that's what this is right here. Look right here. This is that. This is that. And this third one is this one. You see? So let me delete all this. So what I'm saying is this high right here just got broken. Just got broken right there. So when that high was broken, now this lowest down close candle becomes important. The structure is still bullish unless it can prove it can close below that one. Okay, so now we got to keep following the structure. Okay, we just had another swing high. Look at this. Pitchfork. Remember, pitchfork. We just had the pitchfork. Or the top of a house, or however you want to look at it. You can imagine this as the top of a house, like a little house or whatever. And these are the candles. Okay, right there. However you want to think about it, or upside down house for the swing lows. Upside down house. Okay, because remember, this is a swing low right here. We got a lower low. We got a lower low right here, which is that wick. And then we got a lower high. And a lower high on the other side, which is right there. That black wick right here. That wick right there is what I'm saying. That's the swing low. That's why I was trying to show you swing lows and swing highs, because it's very important. So let's go back. So now we have a high up here. Now if this high is taken, then we're going to be looking at this lowest down closed candle. Okay, let's continue to go in the structure. Okay, so right here it looks like this high right here was taken. We look at this here, this high was taken. So once that high was taken right there, this one right here, once it was taken, we look at the lowest down closed candle. If price closes below the low right here, what I mean by the low is, remember, we got two lows. We got the body low, and then we got the wick low. I'm specifically talking about this candle right here. So I'm saying, and when price closes below the body, because this is the body low, okay, then you got the wick low, or what some people call wick game and body game. It's extremely important with this stuff. So what I'm saying is, if price proves it can close below here, now we're in a long-term bearish trend or short-term bearish trend, and then we have to start looking for targets to get out at. Okay, so right here, the last green candle you see here, okay, that one, that took out this high, this swing high. You can see it slightly. It took it out. So now the structure is still bullish unless it can prove it can close below that one. The body of this, not the wick, the body. Let's continue to go in the structure and see what happened. Boom, right here. So what do we have here? Price just proved it closed below there. Okay, you can see that. Let me just turn off it's supposed to be a super thin line. You see right here, the close, because remember, this is a bearish close candle. So opened here, made a high, made a low, and then closed there. So when you look to the right, it closed below. So now the structure is either long-term bearish. Okay, so it's either long-term bearish or it's short-term bearish. Okay, I'm always going to bet on it being short-term because, hold on right quick, what's going on with the mouse, this thing? Or maybe a short on my screen or something. So now what you have to do is you have to look for targets. This is where understanding the structure at a deeper level comes into play. Let me try to change the color. Maybe the purple or something. So what I'm saying now is that once this happened here, you have to look down and see where is it trying to target. So you have to understand the structure. So this is a bullish order block. You see that lowest down closed candle right there? The black one? Hold on. You see the lowest down closed candle right here, that black one? That's a bullish order block, or plus OB. That's how it's an order block. This is ICT's teachings. Basically, and it created a gap, okay, because we see a gap between 1, 2, 3. 1, look at my mouse. 1, 2, 3. You see this gap right there? The gap between the top of this candle and the bottom of that one was created. So I'm thinking price may want to come back down and either touch this or dig into it or even come down to the bullish order block. This is where you can take a short. So I'm thinking if I take a short right here, price may retrace and try to go above this swing high and then come back down. And I'm going to target this bullish order block here. Okay. So my pink is going to be my targets. Okay, I'm going to target the top of this. Well, I'm going to target the bottom of this wick right, this fair value gap. Okay, so what I'm saying is from this wick to from that wick low to this wick high, I'm going to target the low down here because I believe it may want to come in and fill that gap in. Because remember, we have a gap. We have a gap from that low to that candle's high. It's a gap. There's no space in there. You see, I mean, there's no candles in there. You see that? So it has to fill it in because it was so much pressure that went up to create all of this. It created a gap, and it's a gap from here to here as well. See that? From here to here. Let me show you. It's a gap from here to here. So we got a gap from this wick high to this wick low, and from this wick high to this wick low. So the hot pink lines is going to be my TPs, my short-term TPs, okay? So I'm going to take a short down to here. Take a short down to here, and then I'm going to take a short down to here. So this is just scalping, okay? The only reason I'm taking a short is because the market just confirmed that it's in a short-term bearish trend. Short-term or long-term. Most likely it's going to be short-term. Okay, short-term or long-term bearish trend. So this is where understanding the structure comes in, because you have to figure out, okay, well, what can I get out at? So I'm going to get in on 2 short positions. Okay, that's what my little, I'll just do some circles, 2 circles right here. That means I'm short right when this candle closed below this candle here. And my target's going to be those 2 yellow lines. I mean, those 2 pink lines. Now, I'm going to put a sell limit up here, because price, when it breaks structure like this, you usually retrace up and then goes lower. So I'm going to put a sell limit here and a sell limit here. Okay, meaning if price comes up and touches that, then I'm going to be triggered for a short. Okay, so now I'm out. Price just came down. It filled in this gap right here. You see that? From that wick high to that wick low on this bearish closed candle. Because on his stuff, green is bullish and this black is bearish. So I'm out right here. So I might as well delete this because I just got out. Oh Lord. This thing deleting the whole thing. Okay, so I'm out right there on my first short. So let me delete that first red dot. So now I got one more short. My second target is either the top of this. Actually, I probably should be trying to get out at that mitigation block right there, but this is a bullish order block. So I'm gonna get out at that second pink line. Remember, I had 2 shorts on. Boom. So I'm out right there. So I'm out on the second short. Okay, you see that? This is where understanding the structure comes in. So you can, that's why when people are like, are you a scalper? I'm like, well, whatever the market calls for, I can do, or you should be able to do. Okay. So now it's exact opposite. Okay, so now the market is bearish. Let me show you. So price, now if I had another short, my second target would be, let me look at the overall structure. If I held another short, a third one, then my third target would be here. This is a bullish breaker. This low was taken. You gotta look at the highest up close candle. Okay, and this would be the breaker, so I probably would get out. We also have a gap right here as well. From here, what's going on with this pen? From here to here. Okay, we have another gap. So my second target would be, we just got out at the bullish order block here. That was my second target. I got out here and I got out there. If I had another short, I would hold it to this line, this imaginary line right here, which is the top of this formation right here. It's called a bearish breaker. But I want to show how we can follow the structure to see if it's going to break or not. You can just wait for the next breaker structure up. You don't even have to like twiddle your fingers and gamble like what's going to happen. But if I had a third short, I would hold it down to here. Okay, so now this is important. Let me zoom in. So now we're looking at bearish structure. Remember, I was showing you bullish structure earlier over here. Remember with the blue? I was showing you the bullish structure, but now we're about to verify. We're about to see a recent breaker structure going up. I'll do a different color. So basically the way this works is it has to create a bullish closed candle. Okay? When it's streaming down, it has to create a bullish closed candle. Now remember, I was showing you this before. It's the same exact thing over here. Remember I told you, I said the structure is bullish unless, when it took this high right here, I said the structure is bullish unless it can prove it can close below there. The body of the close here. Price kept going up. Then it made a higher high here. And I said, once that happened, price is still bullish unless it can prove it can close below the body of this. Boom, it closed below the body. And now you have to look for targets to the left. Okay, so now it's the exact opposite. Right here, when this low was taken right here, let me draw this up for you. When this low was taken here, you have to look at the highest up close candle. Highest up close bullish candle, which is the bullish, this green candle here. Okay. So what I'm saying is, you see this wick right here? When that low, this took that low right there. This wick low here. Look at my mouse. This wick low was taken by this candle here. This wick low. When that happened, you have to imagine you're a miniature person looking up, saying, what's the highest up close bullish candle? It's here. So basically the structure is still bearish unless it can prove it can close above here. Okay, so you're either going to hold a short that you have, or you're going to sit there and wait for a breaker structure to find targets to get out at and make money. Okay, so price is continue to drop. Okay, so right now the structure is still bearish unless it can prove it can close below here. I'm going to use two different colors. Remember, look at where I'm pointing. Where I'm pointing is the breaks of structure. Let me go back over here. Where I'm pointing at is the candles that it has to prove it can close below there. Okay, so right here, remember, it took the high right here. So once that happened, it had to prove it can close below here, and we're still bullish. It could have still kept pushing up. It closed below here. Now you have to look to the left and say, okay, well, where am I getting out at? That's where a different level. What I'm showing you right now is basic market structure, but like knowing where to get out at and all that, that's more advanced. Okay, so now the structure is built bearish. I'm using gold for bearish. Okay, gold color. Same thing. Remember, it's exact opposite. Just flip the chart upside down. When this low was taken right here, when this low was taken right here, remember, this low was taken by that low. You have to look at the highest up close candle. I just pointed to it by the orange, by the gold color. Okay, so let me draw this again. So now the structure is still bearish until it can prove it can close above here. You get that? Let's continue to keep going. Okay, so you see this structure here. Now this is a swing low. I want to make sure I'm bringing stuff back up the same way. This is a swing low. It's always a 3 candle formation. 1, 2, 3. Okay, 3 is here. 3 is this candle here, that green candle with the long wick, that one. So remember, you can look at it as upside down house or however you want to do it. You know, and you know, the candles are formed in the roof. I mean, however you need to look at it. I don't know. Okay, it's a pitchfork basically. We got a lower low, lower high, and lower high here, which is the low, you know, the wick lows or whatever. So let's go ahead and follow the structure. So that's the swing low I just pointed out. So we're still following the structure, still bearish. So this is how people hold their trades, because it's like, well, It didn't give me a reason to get out, so why am I getting out? Now remember, let's say they were short. Remember, they've been short all the way right here. So you keep that in mind. If you held a short and you just wanted to hold it until the structure broke, then you can do this as well. But you got to be okay with giving some of the money back to the market, because when this happened right here, you know, you may have been up 25,000, but right here you may be down. You may not down, because remember, you got in here. Why'd you get in here? Because the break of structure happened right there. And look what happened. It retraced up and then went down. That's why I was saying, once the structure breaks, you don't have to go short on the open, on the next candle's open, which was here. You can wait on the retrace and then go short. So you actually could have been short up here somewhere versus here. So, you know, you could have been at 25,000 here, but now your profit is only probably 8,000 coming back up. You got to be okay with that. But remember, it could keep dropping. You can go to 50,000, 75,000. So the structure has not broken to be bearish yet. Bullish. It's still bearish. Why? Because when this low was taken, the highest up close candle has not been closed above yet. Still going in the structure. Okay, swing high was just created. Let me explain this. One, you see, you don't get faked out by the bodies. This swing highs is purely based on wicks. Okay, because you got wicks and you got the bodies. You got to understand this. You got wicks and then you got the bodies. For swing lows and swing highs, okay, we looking at strictly the wicks. This game will F some people's head up, man, I swear. But only the real ones gonna make it. You know, people that really want to learn it. The people that's like, well, I don't give a damn how much shit I gotta learn, then I'm just gonna figure this shit out. I mean, you know, don't give a damn how long it take, you know. I mean, that's what I was on, you know. So what I'm saying is, now we have a new structure point. Same thing. You got to look at the chart upside down. Let me ask you this. Okay, so when this low was taken right here, now what do we do? Go ahead. What do we do now? Talk to yourself. Remember, when this low was taken here, I told you to do something. We got to point an arrow somewhere. So what do I point it at? I pointed at this candle, this one, that one, the black one. Which one? Remember, this low was just taken. You're a miniature person looking up for the highest up close, bullish close candle. So the highest up close bullish close. Remember, that's why I was telling you, you got to understand the open, the high, the low, and the close. This is a bullish candle, okay, with the cross. This is the open. This is the low. This is the high, and this is the close. So it opened here, made a low, came up, made a high, and then it closed right here. So this is a bullish candle. Okay, so when this low was taken, the right answer would have been this candle here. The structure is still bearish, unless it can prove it can close above this candle's body. You understand that? It's literally, I don't want to pull the candles over to the right too much so we don't see the structure. Think about this. It's literally the exact opposite. When this high was taken, you got to look at the lowest down close candle. Still bullish, unless it can prove it can close below there. Then it would create a swing high. The swing high was taken. Now we got to look at the lowest down close candle. Price is still bullish, unless it can prove it can close below there. Price is still pushing up. We create another swing high. 1, 2, 3. Boom. Price take the swing high there. Okay, well, the structure is still bullish, bullish, unless it could prove it can close below there. Now remember, you may have been in a buy all the way down here somewhere. That's the power behind this. Your buy may be all the way down here somewhere, and you just follow the structure. You're not freaking out. You're not twiddling your fingers. You're not looking at indicators and getting faked out and all this crap. You know, you can use all that stuff, which is cool, but I'm just trying to show you the bare bones of this shit. And then once it closed below here, now it's bearish. Okay, well, it's trying to get to somewhere. Where's it trying to get to? You have short-term targets, and then you got long-term targets. Some people would have been aiming for that swing low down there. Why is it a swing low? 1, 2, 3. Don't get mixed up on the colors of the candles. The swing low, they all don't have to be the same color. It can be a mixture. It don't matter. Just look at the wicks. 1, 2, 3. Okay. Let's go back over here. I think I explained this pretty good on this. I think this is a very good explanation of how this shit works. So let's continue to keep going. Okay, so the structure is still bearish. All right, still bearish. And once we get a break up, I'm going to show my targets and I'm going to end the video. But I think this is a really good explanation of this for me. No ambiguity. I mean, I talked about looking at the chart upside down. I'm drawing arrows. I'm showing you the close of the candle, all that. But if I didn't explain it properly, please let me know so I can, explain it better. Because, I know I could do a better job at explaining it. So now the structure is still bearish. We're still following the structure. Now, what do we have here? Okay, let me stop. Okay, so we have a bullish close candle. Then we see the low is taken right here. Okay, so based on what I'm seeing, when this low was taken right here, I think we have to look at this highest up close candle right there, the green candle. Okay, the structure is probably still bearish unless it can prove it can close above there. But what I really like to see is some space in between these previous lows being taken. You see how it's space right there? This low was taken here, and see we have a huge gap of space, but right here we don't have any space. Let me show you. We don't have any space. I mean, you see space, but we don't have space in between the candles. It's kind of a hard thing to explain. But let's continue to look in the structure. Right here, we got 2 bullish candles, but we don't have a close above here yet. Okay, so now we have a close above here. Okay, so now you got to look for the targets. Now we have another gap right here. Remember, the gap between the candles is we have a bullish order block right here, a bearish order block. It's the exact opposite of the bullish order block. The highest up close candle before the huge push down, it all came out of this one candle here. Okay, that bullish candle, let me delete this so you can see this bullish candle here. So now we got to look for targets. Price just broke structure. It closed above this candle here. So it already reached into this gap right here. So if it's going to continue to keep pushing up, I would say price may want to fill in this gap. So my first target would be here, and then may want to come into this bearish order block, which is here. Okay. Now remember, we can't do anything until the candle closes. So it already closed. So we would get in on a buy here. So we got 2 buys in, and then if it comes down, I'll make this yellow. If it comes down, we'll get in on a buy limit and a stop loss. Okay, I'm thinking this one may, because I really like to see space in between those. I really don't like seeing this type of break, but I stop would be down here. This is probably too big of a stop, but okay, so let's continue to keep going. Yeah, it looked like we're gonna get stopped out. I guess not. Okay, so let me explain this. Now remember, the stop would be the turquoise line. Now remember, I had 2 buy limits right here, because when you get in, if you some people wait to the retrace, see the street. That's when I probably should have just waited, because I don't want to teach you how to do it the wrong way. When it breaks structure, it's always going to retrace a little bit before it goes higher. That's not always true. But we did just make money, because remember, my first TP, my first take profit was here. Remember I said, if price comes up, I think it may want to fill in this gap right here. So what gap am I talking about? From this wick low to this wick low, it created a gap. Remember, it would, when price pushed down hard, it was so much pressure that all the candles didn't connect. This candle to that wick high, that wick low didn't connect. So it has to come back in to fill it in. So my target, and remember I got in on 2 buys right here. And then these are 2 buy limits. So these got triggered. So I gotta make this green. These got triggered. So I got 4 positions on. So right here, I'm gonna get out on 2 of them. Because remember I said it would come up to this top of this gap to fill this gap in. That's what it did. So I'm out here on 2 positions, 2 buys. Okay, so let me go ahead and delete this. I'm out. This thing. Okay, so I'm out on these 2 buys right here. So I still got 2 more buys on. Okay. Then I'm about to end the video. It's too long. This is the gap. This orange line is considering the gap. My next target is this bearish order block right here. I believe it's going to come up there and want to touch it. Okay, and then I'm going to get out at the other 2 if it comes up there. Okay, so it did that. Now let's continue running. We can see with the next candle, but I got out my other 2 positions, which was down here, these buy limits. I got out here. These are short-term targets. Now some other people watching the video would be like, well, I just would have got out the swing high. Okay, we all see the market differently. I'm not saying that wasn't going to work, but based on the way I've been trained out, I'm just going to get out at the wick low of a bearish order block. Okay, which is this here. So this trade worked out, as we can see here. So let me delete some of this. Delete this. Stop loss was down here. Those are my 2 buy limits. Okay. And then I'll just say this and then I'll end the video. Basically it's the same shit. I mean, you know, now remember, we're going back bullish. Now when this high was taken here, remember the same shit I just showed you over here. It's literally the exact same thing. You're gonna get bored of this stuff, but that's a good thing. Remember, it's gonna be the exact same thing. When this high was taken, lowest down closed candle became important. This high was just taken, lowest down closed candle became important. Why? Because the structure is still bullish unless it can prove and close below there. I don't even know what time frame this is. I don't care. That's how it works. You need to have multiple time frames in front of you, obviously, so you don't get faked out. Well, let's just take a look at this real quick, then I'll end the video. I didn't know it was this long. Okay, so here, same thing. It made a swing high. 1, 2, 3. High was taken. Look at the lowest down closed candle. Still bullish unless it can prove it close below there. Same shit. Now we're going up. So remember, if you held the buy, see, some people are going to wait for a break of structure and just hold the buy until the structure breaks. Or you can just scalp and get out knowing the advanced market structure, like the gaps and the order blocks and all that. But think about it. Think about it here. If you waited for the break of structure, which happened here, and you waited for price to retrace down into this wick. Now this is a wick as well. The market look at wicks as gaps. This is super advanced, but this is a gap right here. We break it up into 3 sections according to ICT's teachings. We got consequent encroachment, which is 50% of a wick. Okay, it's always going to try to reach for 50% of that wick. Look what it did right here. All you gotta do is measure the wicks. I'm talking about open wicks. See, this wick was open right here. Let me show you. Remember, when structure broke, right here? It closed above right here. So this wick is open. I should have seen that. Damn. I was like, okay, if it's gonna retrace, where's it gonna retrace down to? I should have seen that it probably is gonna reach for 50% of this wick. You know, I would say 40 to 50% of that wick. And look what it did. Came down to retrace. Literally within 50% of this wick, damn near 40%. And then it took off. Okay. So now the structure is still bullish unless it can prove it can close below here for right now. We keep on going. Now remember, this is how people get the money. You either can scalp it, or you can just wait for the straight break of structure and just hold it until the structure break. So let's say I would have bought here as a sniper. I would have bought right here, and I'm like, I ain't selling shit. I'm gonna hold this buy until I see a close below there. Now remember, you got to be okay with giving some of the money back, because you could be up 37,000, but by the time it breaks structure to go back down, the profit may only be 30,000 or something like that. Still bullish, still holding your buy. Remember, you still holding your buy from all the way down here. Are you scared? Are you looking at indicators? Are you looking at the news? No, you're looking at the goddamn structure. Okay, so even right here, we see this huge drop. And based on what I'm seeing, the market is still bullish unless it can prove it can close below here. So let's continue to follow the structure. Still bullish from what I'm seeing, because we don't have any bearish closed candles now. This candle right here looked like it might be a bearish closed candle, but it's a doji, dragonfly, whatever they call it. Okay, I can't really see with this screenshot that I took. Now here's an important key. I'm gonna ask you this in the video. What do I do now? After everything I just showed you, what do I do now? Remember, this high was just taken. So where do I draw my diagonal line? This line right here. Hold on. This line right here, where do I draw that line at? Do I draw it here? Do I draw it here? Here? Where do I draw this blue line? What do I move it over to? I'm gonna give you a hint. Look right here. This high was taken, so I have to draw the blue line where the high was just taken. It was taken here. So now what do? I got an arrow. What do I do with the arrow? What do I put the arrow at? Remember, you're a miniature person looking down. You're saying, where's the lowest down closed candle at? Bodies. Lowest down closed candle. Bodies. 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 Bodies, not wicks. So what do I do with this arrow right here? What do I move it to? Do I move it to this one? That bearish closed candle, low, that one, or that one? Which one? I'm gonna move it to this one. The structure is still bearish unless it can prove it can close below here. Okay. All right, well, so basically you would continue to just keep holding your buy until, even right here, you got to be okay with this, because you may be at like $50,000 right here holding, but right here you may be at 50,000, 45,000. You got to be okay with, because remember, if it closes below there, you're out. Or you can actually, when it closes below there, you can just wait on a retrace for it to come back up a little bit, so you can make a little bit more, keep a little bit of your money, and then when it finally drops, you just sell it. Right here. See that? It took that low right there. Now the structure is bearish. Okay. So we didn't get a hold on quick. Let's see if it still dropped. This is a powerful example right here. Yeah, so you could have sold right here. You could have got out right there, and you'd be like, damn, I gave back all that money that I made from right here to right here once it closed below there. Yeah, that's true. But remember, you've been holding that buy all the way down here. Okay. All right, thanks for watching.